We are going to be having questions held to the end of the webinar. So as you're listening to our various speakers today, please hold your questions until the end. And then we'll do some Q&A with our specialists here today from USDA. Again, my name is Aubrey Betancourt, President and CEO of the Almond Alliance, the voice and advocacy for the almond community of the United States and of California, both in Sacramento and Washington, D.C. Our job is to help find these programs and policies, help find out what you need on the ground that works to keep our community thriving, and work with entities like USDA and others, not only to provide technical services such as this, but to provide key technical information to make those programs most effective and efficient for our industry and for our community. So with that, I think I've covered all of the ground rules. I'm glad to see so many people joining in and hopefully see so many more. This will be one of many different features such as this with USDA and others. We want to make sure we're providing this information to our community. Please tell others. And hopefully today you'll find some very worthwhile information, especially in light of recent disasters. That's definitely one of the programs that we want to highlight here today. So with that, we're going to go ahead and proceed with our presentations. I'd like to welcome the California Farm Service Agency's State Executive Director, Blanc Zhang.
Hi, Aubrey, this is Brooke. Blanc's gonna try to come in at the end. He had a last minute call he had to jump on. So we'll get started with our first presenter and I'll pull up the slide.
That sounds great. I remember those days. So with that, I think we're going to Navdeep Dhillon, Program Director.
Actually, I think I'm starting, Aubrey.
Oh, you are, John. Okay, my schedule is upside down. John Osterman.
Yes,
John Osterman,
Aubrey.
Fellow Central Valley Fellow and Director of Farm Loans for California. So it looks like we're starting with Farm Loans programs. Thank you so much, John. And the floor is yours.
Aubrey, thank you very much. And looking at the participants, a couple of names stood out to me. So Bob and Stan, it's good to, in this case, be on a Zoom meeting with you. It's I got to know Bob back when I first started with the Old Farmers Home Administration in 1987. Just a little bit about myself. Again, I'm John Osterman. I'm the Farm Loan Chief. And I grew up on a dairy farm in Oakdale, California. In 1987, I went to work for the Old Farmers Home Administration. And again, for some of us here that remember back then, it was a very difficult time in agriculture. In 1986, during the almond bloom, usually about 20 days, it rained 19 of those days. And so, and various other issues in the industry were such that it was very difficult. I can recall going to many almond farmers, among other farmers, and the common theme that I heard at that point was, if it wasn't for Roy Burnett and the Farmers Home Administration, I would have lost my farm. Again, my name is John Osterman. I'm the Farm Loan Chief at the Farm Service Agency. Worked for FSA FMHA since February of 1987. Started in the Stanislaus County office and became Farm Loan Manager in 1994. And was grateful to be selected as the Farm Loan Chief in 2012. So it's I've been up at the state office serving as the Farm Loan Chief, California Farm Service Agency, the last 10 years. What is the Farm Service Agency? The Farm Service Agency, you see the information on the screen. I wrote some additional notes. It's an agency that consolidated the farm loans of the Farmers Home Administration with the various programs of the ASCS. One of the key themes when they consolidated the agency is that for farmers in it, so to speak, one-stop shopping. And we're typically throughout the state, throughout the nation, in the same office as the NRCS. Next slide. So here's a map of California, and specifically the FSA offices and areas. You can see the effectively there's 4 districts, but more importantly, as relates to this presentation, it outlines for you the farm loan program offices. In California, we have approximately 45 employees that work farm loan programs throughout the state. I look at us as a lean team. We're in the big scheme of California agriculture financing. We're not huge, but again, we're a lean team. And we have very experienced personnel throughout the Central Valley and have made a significant number of almond loans, operating loans, development loans, and real estate purchase loans. Next slide. So we're, when I first started, we talked about the lender of last resort, and the agency chose to change that type of thinking, and we're the lender of first opportunity. So we provide farm credit when and where it's not available in the farm community. Again, you see the information on the slides. We do place special emphasis on providing loans to beginning farmers and targeted underserved communities. The funding that we receive, some of it is, so to speak, fenced off for, again, underserved communities. Next slide. Some eligibility requirements of the FSA farm loan programs. Probably a couple of the key things there. Acceptable credit history. And so what does that mean? The FSA does not base its decisions on a specific credit score where it's recommended to us or directed to us not to discuss credit scores, but we do look at, rather we look at a pattern of the individuals meeting their credit obligations. One other thing as relates to delinquency on federal debt and tying in with that, if there is a past debt write-off in many or most cases, then that would also prevent an individual from obtaining a new loan. Although if the write-off was small, we've had, we'll talk about youth loans, and we've had youth loans that were written off for $1,000 and individuals then come back, hey, I'll pay that $1,000 if I get a loan. So that kind of thing can happen. Next slide. Direct. So we have two main programs that we implement in the offices, and that is our, actually we have our direct program and our guaranteed program, which I'll cover in a bit. But in general, under our direct program, we have farm operating loans and farm ownership loans. And again, you see the information there. We do have limitations. And on the farm operating side, $400,000. The interest rate right now on farm operating loans is 2.375. On our farm ownership loans with the Farm Bill of 2018, thankfully they raised our limitation from 300,000 to 600,000. And our interest rate on our farm ownership loan program right now is at 3%. Next slide. Microloans. Back in 2013, the national office developed a microloan program, and it's been a very successful program for those small farmers that need 50,000 or less. The application process is more streamlined and reduced security requirements. And you can see that the experience requirement for operating, the mentor can replace the experience requirements that are found in our handbook. On the farm ownership loan side, there still is that 3-year experience requirement for farm ownership loans. Next slide. Joint financing farm ownership loans. I just mentioned the fact that our loans can go up to 600,000 on real estate loans. And this particular ability to do joint financing is a very important part of our program. The Farm Service Agency partners with the Farm Credit, various farm credit banks, and other agricultural lenders. And the FSA, the Farm Service Agency, is able to take a second deed of trust behind other lenders that typically take a first deed of trust. And you can see that interest rate at 2.5% is a very favorable interest rate, again, below our normal interest rate of 3%. So this has been thankfully with the increase in up to 600,000, this has been a program, the joint financing program has been a well-used program. Next slide. Beginning farmer down payment program, even a more favorable interest rate. This program is used throughout the state, probably a little less than our joint financing program, and partly because there's a few more requirements, but again, a very favorable interest rate. The term on this is a 20-year term initially, and once again, we can take a second trust deed. We can also guarantee the lender's first trust deed. Probably the one feature, not surprisingly, based on a 1.5% in 20 years, that a farmer that participates in this has a quick pay down on their FSA debt. Next slide. All right, so what's needed to apply? So again, you see the items there, and I just added a couple of additional items, certainly on our many of our operating loans. If the farmer is leasing property, we certainly lease a copy of the lease would be part of the application. We don't generally have fees, but there is a credit report fee that is part of the application. Also, for operating loans, there are fees to file the uniform commercial code filing with the state of California. So very minimal amount of fees, generally under $100 as it relates to loan application process. If the request is for a almond development, the farmer is planting 20 acres, 40 acres, a development plan outlining the costs with cost estimates would be part of a complete application. And typically, we also require things like a debt verification, and if there's non-farm income verification. All right, next slide. We talk about progression lending. When I first started, the term that was in our handbook was supervised credit, and so we replaced that with the term called progression lending. And so you can see the things we have here. Financial information required at least annually, and that's for annual operating loans. There is a graduation to commercial credit requirement when financially ready, and the issue of environmental compliance. It's important specifically for construction, usually on annual operating credit situations. Most of the time, the farmer is already in compliance. Next slide. Interest rates, as I mentioned earlier, the farm ownership interest rate is 3%, and the operating interest rate is 2.375. Next slide. We do have a guaranteed loan program, approximately dollar-wise, approximately 1/2 of the monies loaned is through this guaranteed loan program. And I liken it to an insurance policy. And so the—
John?
Yes.
We can't really hear you. Can you? I think you're too close to the mic. Can you?
Am I too close to the mic?
Possibly. The volume and the voice is not coming out clear.
Okay. Let me move back. Is this any better?
Yes, it is.
Okay. I may have been, so my apologies. I was likely too close to the mic. All right. Okay, so anyway, with the FSA guaranteed loan program, we can guarantee 90 to 95% of the loan, and maximum loan guarantee is $1.825 million. All right, I think that is, one more slide, emergency loans. Excuse me, two more. Youth loans. So we make youth loans. This has been a big part of what we have done in California in the past. We have typically made about 400 youth loans in California. With the pandemic, there has been, of course, some changes with the county fairs and so forth. And so our youth loan production in the last couple of years has been down some. But what I see this year is that that has now increased again. So we do make youth loans up to $5,000. It's tied in with 4-H or FFA. And again, an important
Excuse
part
me.
of our
There's a lot of statics in your voice.
Okay.
I don't know if there's a wind out there, but there's just a lot of statics. I'm sorry.
That's okay. Appreciate that to understand that. Okay. One more slide. Emergency loans. The agency does have an emergency loan program. The program is available. The issue of at least a 30% loss, that's on the production loss side. And we do make emergency loans for physical losses as well. And so that is where, of course, the cow herd is lost, or I can recall making a loan on a squab operation that was many of the facilities were washed down the river. It was reasonably close to the river, Valmy River. And anyway, so we make physical loss loans as well when an emergency is declared.
John, can I ask a quick question on that?
Yes.
That's under a declaration of disaster. Under which type of declaration, please?
Yes, I don't have that right in front of me, but we usually talk about secretarial designations and presidential declarations.
Okay.
And there is a difference there, and I don't have necessarily the details on that. Typically, and we can think about the issue of the current of the freeze last week. Under circumstances where there is significant loss, a disaster gets declared, and information is provided by the department then and distributed. We again, one of the keys there though is that the application for an emergency loan does need to be filed with the local office within 8 months. The actual application, in some cases, of course, it's close to the deadline, and additional documentation can be received after the 8 months.
Okay. Thank you.
Yeah.
Okay. Does that conclude? Oh, there we go. Very good. Well, thank you so much, John. And we'll kick it over to the Farm Program Chief for FSA, Navdeep Dillon.
Hey, thank you, Aubrey. Can everyone hear me okay?
Loud and clear, Nav. Thank you.
All right.
Yes,
Perfect.
thank you.
All right, great. My name is Navdeep Dillon. I'm the Farm Program Chief for California. Actually, I administer all of the farm programs, so everything ranging from the tree assistance program that we're going to talk about to our disaster programs, conservation, and our traditional ARC, PLC, and all of the commodity programs. And so today we're just going to do a quick overview on the tree assistance program. And this program is eligible. The assistance is available for orchards and nurseries and vineyards to rehabilitate the trees, replacement or rehabilitation after a disaster, after an eligible disaster. And we'll talk about what disasters are eligible in the next few slides. So in order for you to be eligible for the program, you have to suffer a 15% loss adjusted for normal mortality. And normal mortality is what the agency has determined that an orchardist or a nursery owner would normally lose in an average year. So 15% in addition to the normal mortality. And this program is a calendar year program, so it starts on January 1st and it concludes on December 31st. And there is a window after the end of the year to file the applications. The program does not have a payment limitation as some of the other programs do that are administered by FSA. However, there is a AGI limitation. This is adjusted gross income. So any producer whose adjusted gross income is over 900,000 is not eligible for this program. And we do have a limited acreage limitation. So per year, an entity is only eligible for 1,000 acres. And so that's if you have a large entity and and you lose a lot of acreage due to an eligible disaster condition, we would limit you to the 1,000 acres. Okay, next slide, please. So as I said earlier, the eligible disasters that are considered natural disasters under the agency's definition, it ranges from drought to fire, freeze, hail, excessive winds, lightning. Lightning might start a fire, or lightning might damage a lot of trees. And another condition that's also eligible is plant disease. So all of these are the eligible disaster conditions. And one condition that you may not see here, which sometimes happens in California, is excessive heat. At this point, excessive heat is not an eligible disaster condition. However, anytime that you believe that you've lost some trees due to a disaster that you determine to be a disaster, always file an application and let the agency work with you on determining whether that qualifies or not. And we do have few diseases that have been determined eligible by the agency for California. Next slide, please. And these are the diseases that have been determined eligible already. So red blotch is for grapes, and citrus, we've got some diseases that are eligible for citrus. And for almonds right now, Ganoderma is the only disease that's eligible for almonds. I wanted to list all of these, and I know most of the orchards have diversified operations, so you may have other types of trees or vines which may have been impacted by any one of these eligible disaster conditions or disease. Next slide. So losses that are ineligible. So lack of irrigation systems, that's not, and if you lose some trees due to lack of irrigation system, that would not be a eligible disaster condition. Losses that are prevented through readily available agricultural measures, or something that if you lose your tree due to a non-good farming practices, those would not be eligible. If you lose any trees that are old, due to age, and anything that you would have replanted within the 12 to 18 months, we would probably consider those as ineligible as well. If you're any trees that you have planted which are not for commercial purposes, those are also not eligible under tree assistance program. And any other conditions that the agency, mostly the county committee, determines cause that is not due to a national disaster would not be eligible for this program. Next slide. Eligible producer is a producer who has planted the trees or has purchased the trees. You purchase an existing orchard or a vineyard, then you are an eligible producer. You have to suffer the loss due to, again, an eligible disaster conditions, and you have to have owned the trees or the vines from the time of the disaster to the time of the time that you filed the application. So you have to be the person who lost the trees, you own them while the disaster condition occurred, and you were the one who's going to replace them. And so you are the one who's filing the application. Next slide. So these are all the forms that are required for you to have a complete application. The CCC 899 is the TAP application, Tree Assistance Program application. We do require an acreage report, which is we call it an acreage report. It's a form FSA 578. And the deadline to file the acreage report is March 15th of that year. So for 2022 program, you have to file your acreage report by March 15th. If you have insurance and if you file a report with your crop insurance, we would consider that as having a report filed timely. However, if you apply for the program with FSA, we would still require you to file a 578, but it would not be considered late. It would still be considered filed timely if you file it with crop insurance by the March 15th deadline. The farm operating plan is basically you're kind of telling us if you're a individual, you're giving us your ID, and you're telling us what type of operation you have, who's doing the work and all of that. And then if you have a entity like a partnership or a LLC or a corporation, you're telling us who's in this corporation, what inputs they're providing to the operation. That's what the farm operating plan is. Farm records. This is a record of that FSA keeps of. We have a GIS location of where your property is located. We have the acreage information, and we keep that as a record. So if you don't already have a farm record established with FSA, you would be required to provide ownership documents. If you own the property, if you're leasing it, you would need the ownership as well as the lease documentation to establish the farm records. Another form that's also required is an AD 1026. This is a conservation compliance form, and this is where you're certifying that you have not, that all of you are in compliance with highly erodible lands and wetlands. And normally orchardists and vineyard producers don't have any issues with this form because you're not annually tilling the land, and so it should be fine. Next. All right, so the TAP applications, how do you file those applications? You file a separate application for each crop type. So if a disaster occurs and you lose, hopefully this never happens, but if you lose your grapes and your almonds at the same time, you would file two separate applications and you're filing by crop. We do require that you file the application within 90 days of the disaster event or when the loss become apparent to you. So for the most recent freeze that we had, if you think you're going to lose some trees, you want to go ahead and file an application with FSA within 90 days. However, if you go, you think you're okay right now, you're not going to lose any trees. However, you get further down the road, let's say into July, August timeframe, and you start seeing damage. And then so you want to file an application as soon as that loss starts to become apparent to you. And you want to be able to prove to the agency that that this is when the loss was apparent to you, and you want to go ahead and file an application. You only need to file one application, only one disaster on each application. And then if you're sharing with a like a landowner-tenant relationship, each person has to file their own application. And the application is available in a few different languages. So we have it available in Hmong, Vietnamese, Spanish, and Russian. Next. What practices are available? So we do have a replacement practice, and then we have rehabilitation. So replacement is where we help you replace the trees that have actually died, and then we pay you for the tree itself, a cost share with you on the tree itself, and then the planting costs and the site prep. And the rehabilitation practice is available to where you need to prune the trees back, or you may lose some trees, and then some of them just need to be rehabilitated, so you can apply for those. One caveat to the rehabilitation is that in order for you to qualify for the rehabilitation, you do have to have met the program requirement, which is that you have to lose at least 18% of your stand. So if you have a 100 trees that you lost, or you have 100 trees in a stand, you have to lose at least 18 trees to qualify. And then if you, let's say you lost 50 trees, we would help you replace the 50 trees. And then if you had 80 that need to be rehabilitated, yes, we would in that case you are eligible for the program. We would rehabilitate and replace whatever damage that there is in that orchard or the vineyard. Next. Again, as we kind of talked about a little bit for this slide here, this program does have a normal mortality. So you have 15%, which is required for the program and adjusted for normal mortality. So for us, all of our orchards and vineyards had a 3% mortality. So in order for you to become eligible for the program, you have to lose 18% of the stand. Okay, next slide. Again, how does the program work? You file an application. As I said, you file an application within 90 days of the disaster event, or when it becomes apparent to you, earlier of the two, or whenever that happens. Environmental compliance. This is a very important part of the application process. And we need to, before you do any type of work on any damaged trees or within that field or within that tract, we want to make sure that we do our environmental compliance work. And if you start your practice, or if you start doing any work and you haven't had the opportunity to do environmental compliance, which requires us to do consultations with the State Historical Preservation Society, we have to look at all the endangered species. We have to look to see all the environmental impacts. So all of that is required before you do any type of work on a damaged piece of property. So before you do any type of work, file an application with FSA, give us the opportunity to do our environmental compliance review. We will send out a loss adjuster to do an initial inspection to look at the damage and determine if the trees are dead or what type of damage there is. And then once you file the application and we do our environmental review, we've had a loss adjuster go out, the county committee will act on the application. They will either approve the application and notify you, and if they don't approve the application, you will be provided appeal rights. And if we deny the application, the appeal rights, the determination letter will be very specific on why you were denied, and you will have appeal rights. The county committee, state committee, national appeals division. We also have an opportunity for you to mediate with the agency, and so all of those options are available to you. So if you do have a disaster event, contact FSA first before you do any type of work. So if you're approved, and you would be notified that you're approved, you would start your practice, complete the practice within a year. You have a whole year to complete the practice, or which is replace your trees. You would notify us that you've completed your practice, submit your bills, all the documentation that you have. FSA loss adjuster would go out and verify to make sure that you have completed the practice. And then after that, we would issue the payment. One caveat here is that if you don't have to replant the same crop that you lost, and you don't have to plant on the same acreage. And so let's say if you lose, you lose grapes and you don't want to plant grapes again, you want to plant almonds, you can do that. However, the cost, the price that we paid you would be based on the grapes, because that was the crop that you lost. So there is some flexibility within the program. Next slide. Eligible expenses that you can submit to the agency. Of course, your tree, what it costs to plant the trees, and then what did you pay for the trees, and how much did it cost you to prepare the land, pull the trees out, you want to turn all that in. In addition to all of that, trellises are an eligible cost, stakes, ties, and fertilizer is eligible costs, transporting the rental equipment, burning the destroyed trees, bushes, or vines, labor overtime, your labor if you're the one who is putting the trees back in. All of those are eligible costs. Some of the ineligible costs are royalties, commissions that you may pay to someone, shipping of their trees, bushes, and vines. If you decide that you want to survey your property, that's not an eligible cost. And if you're supervising your laborers, then that's not an eligible cost that you can turn in. However, you can turn it if you do actual work. Workers' comp and other insurance, that's also not an eligible cost. Next. Again, just as a reminder, file your application within 90 days of the disaster event or when it becomes apparent to you. Do not disturb the ground. And if you do, it may result in eligibility for the program. Complete the practice within 12 months of approval. Notify the county office once your practice is complete. And if we do allow producers to go beyond the 1 year, due to if you have a valid reason, such as you couldn't get the trees that you wanted to plant in time. For some of the disease, it's recommended that you wait about a year or maybe a year and a half before you replant. So we do take all of that into consideration and are willing to work with the producers to make sure that they are paid the benefits that they're due. Next. All right, that was it for us. Here is a link for you to contact your local FSA office. We have offices, as John said, we have offices located throughout California. Some of the offices do handle more than one county office. So this is a great website for you to go to and find a office location near you. Thank you.
All right, thank you so much, Navdeep. I think the big takeaway there, and we'll cover it again at the end, is if you feel you have experienced disaster or damage due to natural disaster, whether a declaration has been made by your county ag commissioner or by the state or the feds, first and foremost, get into your FSA office and get on the record that you have experienced that. And then it can always, you're in the queue, and it can be sorted out as those other policy decisions get caught up to the actual event itself. I think that's the biggest advice. Speaking on behalf of the Almond Alliance, I'm going to give all of you is if, especially in light of this recent freeze damage, if you have experienced loss, we are getting numbers, and thank you so much to so many of you who've been reporting up to us as we're working the policy side to make sure that all of the appropriate parts line up for Navdeep and her team and the others to be able to provide assistance. It's most important that you get on the record with your local office and you get in the queue on that. And then whatever comes, and you're already, in the system and ready to roll. So biggest advice, always, whenever something happens, call your FSA office first. Okay, well, let's flip it around here and give it over to Ryan Mortensen and the RMA office. Is RMA available?
Yep, starting to share my screen now.
Very good, we'll flip it over. Thank you so much.
Can you see that okay and hear me loud and clear?
Loud and clear, and we can see it. Thank you so much.
Perfect. Excellent. Well, my name is Ryan Mortensen. I'm with the Risk Management Agency. I'm a senior risk management specialist in the Davis Regional Office here in Davis, California. Since it is an almond meeting, I thought I'd start with, introducing the almond policy. And then I'll talk about a few other plans that we have out there. First and foremost, with the almond policy, it is actual production history plan. So that means we're using your production history, and it's based on production. It's not a revenue program. And you can, as a grower, you can select which coverage level you want. That's available. There's CAT, which is short for catastrophic, and then what we call buy-up, and that's 50% up to 85% coverage level. And based on what your coverage level is, that's where the subsidy varies. If you have the highest at 85%, your subsidy is going to be 38% of that overall premium that you'll have to pay. Meaning you won't have to pay 38%. That's going to be subsidized. And then the liability is based on, an RMA released price, and that price goes out initially, so for the 2023 crop year, that price will be released in late August. And then oftentimes we have to follow up with an additional price. And that's always done, 15 days before the sales closing date, which I'll talk about in a minute. Like I said, the sales closing date for almonds is 12/31, and so that additional price, if there is one, will be released 15 days prior to that. The other key date is, the acreage or production reporting dates, and that's 3/15. So that's when you actually say, okay, I've got this many acres, and this is what I produced last year. So that's due on 3/15. These are the counties that are where the program is available. We just added Placer and Sacramento counties last year, or I guess it's for this crop year, for 2022 crop year. And there's always, if you're growing in another county besides these counties, there's always a way called a written agreement that we can get you insured. And so kind of how the cycle works, the insurance attaches, of course, the day after that sales closing date. Like I said, you report your acreage. Billing, the premium billing goes out on August 15th. And then the coverage ends after, one of the earliest of these two. Usually it ends when it's harvested. And what happens is the day after it harvests, insurance attaches for the following year. And so any natural disasters or anything like, drought or anything like that occurs following that harvest would be, a possible claim for the following year. And so these are the causes of loss that are covered under the policy. Potential ones here in California would be, disease, failure of irrigation supply being the big one, number 7. We don't have too many issues with wildlife or earthquakes, or especially volcanoes. But it's always a potential, I guess. You could get fire too. I'm just showing some, the history of the crop for 2020. We had, 4,500 policies. The key one to look at is the liabilities at $2.6 billion. We've seen an increase in 2021. 2022, we're still getting data from, so we don't have those numbers, but number of policies went up, a couple hundred policies. And then the key one to look at is in 2021, the $27 million paid out in indemnities, excuse me. So we've had some losses, and 2022 is, not looking any more promising. So we'll see how 2022 crop year ends up. When there is an event, similar to the FSA programs, it's best to just be safe and file your notice of loss. These notices need to come in within 72 hours of the initial discovery. If you go out in the field and you see something going on with your almonds or any other crop, you can call your agent and file the claim that way, but it should be followed up with like an email or a letter, something in writing. But as time goes and maybe you didn't notice anything, the latest you can file a claim is 15 days after the end of insurance period, which for almonds is in November. So hopefully by then you've had your production report and everything come in, and you can identify that there was a loss. So just kind of as an example, we've got Farmer Jan. She's got 100 acres of almonds. Her average yield, based on 10 years of data, is 2,500 pounds an acre. She's got 65% coverage level. The RMA price that's really and let's just say in this example, there is a weather event that causes a decrease in production. By the end of the year, she realizes, oh, I've only got 1,000 pounds an acre. she files that notice of loss. And so you just take the difference of her guarantee versus what production to count was. And so she's short 625 pounds. And so we just go through that calculation. She ends up getting an indemnity payment of $146,875. I wanted to share this screen, for crop insurance. If you need help finding an agent, if you go to our website and click the tools drop down, there's an agent locator. Also wanted to point out this actuarial information browser to the right of the agent locator. That's really valuable too. You can look up each crop in your county and get dates and prices and all that information, rates as well, that you need to make your insurance decisions. So moving on to some other topics that are really important. These don't apply to almonds. Preventive planting doesn't. This is for annual crops, but I thought I'd cover it here real quick. As the name suggests, this is when the grower goes out into the field and they're not going to be able to plant, whether the field is underwater or whether there's just no water. Whether it's, you're not going to get water from the district or there's not enough soil moisture to plant a crop. Oops. And so these preventive planting is just built into almost all annual crop policies. The rates you pay for it through the rates. It's just already there. One exception I can think of is tomatoes. Processing tomatoes doesn't have preventive planting. And the preventive planting coverage levels, these can range 25 to 70%. And again, you want to look at that actual information browser that I pointed out on the previous slide to see what percentage is given for a crop. And really something to think about is the insurance period is different for new insureds versus carryover policies. Meaning that if I walk in and sign up for crop insurance in, let's say, March, once that insurance attaches, that's when that prevented planting event has to occur. Whereas if I'm a continuous insured or carryover insured, let's say that we didn't get any rain, all winter, December, January, no rain, that would be covered for prevented planting because it occurred within the window for carryover, but not for the case for new policyholders. A really important concept is reasonable expectation when it comes to not only just preventive planting, but all crop insurance when it's an irrigated practice. So if a grower, let's say I grow cotton and the sales closing date is in February, and in March, the water district announces there's going to be zero allocation. I don't have reasonable expectation to plant, and therefore I would qualify for a preventive plant payment. Eligible acres is another really important concept. If I grow 50 acres of cotton, for example, I can't claim 500 acres for preventive planting because it just doesn't show that I've produced that in the past. And something that just changed this past year, in order to be eligible for preventive planting, you have to have the crop has to be planted, have been planted, insured, and harvested in one of the 4 most recent crop years. And so that's really key. So meaning you must have insured that crop and planted it and harvested it, within the last 4 years. And this is a new program that just started last year. And the key point I want to bring up is it's a premium support program, which means that it just helps you pay your premium. It will be maxed out. The benefit would be maxed out by the amount of premium you owe. And this is just to help people report their cover crops. Again, it is just for annuals. And it has to qualify according to there's an FSA list that has it, all the qualifying cover crops. And so basically it's $5 per acre, and you're automatically enrolled when you file that acreage report with FSA, like Navdeep had mentioned, by March 15th. So if you've planted a cover crop and can show it, you can get up to the full premium owed for your crop insurance paid for by this program. And I believe that's it. If there's any questions, later on, I'd be happy to answer them, and feel free to reach out if you have other questions. I'm available whenever you need me.
Thanks so much, Ryan. I'm going to kick back over here to Brooke. Brooke, has Blong been able to join?
I'm looking and seeing here. No, he's still on that call.
That's okay. It sounds like we're having, we've had a USDA circling of the wagons. We're experiencing the same thing with NRCS. So we apologize to our audience today for some confusion there. With that, how about I just open it up to questions for right now while we work through the rest of the team here and make sure that we get information pulled together here on our end. Thank you for your patience. Thanks for everybody's expertise, and for those that are on with our USDA partners, FSA and RMA. Thank you for sticking around for questions. So with that, I'll open it to the floor for Q&A.
Hey, Aubrey, this is Navdeep. I was going to make a comment about the cover crops.
Okay.
So you can plant a cover crop between your trees and it would be an eligible cover crop. So you don't have to plant it on an open field. So wanted to just kind of mention that.
All right, great. That's great information. Any other questions? Oh, I have a request in here, says review cover crop again. Could you provide just maybe a quick top line review of that?
Was that for you, Navdeep, or for RMA?
Not sure. Stan, did you want that from RMA's perspective? Yes, RMA.
That'd be me. Yeah, you bet.
Yep.
I can put that up again.
Thank you.
So I'm assuming it's with this this slide, and Navdeep, on our own programs, you can correct me. I wasn't able to find out if it is just for annuals, but I was assuming it was. I would love to know. I can dig more on that part.
Right. So go ahead.
Yeah, well, I was just going to go over it kind of again with the cover crop. It's, if it has to be a qualifying cover crop from that list that FSA has, and I can send out a link if you need it. It's also on our website. But basically, if you plant a cover crop and report it when you file your acreage report with FSA by March 15th, RMA will pay $5 per acre. The maximum of that benefit being, let's see, my premium was $1,000. They'll pay me, up to that $1,000 I owe. Go ahead, Navdeep.
Yeah, and so basically a cover crop is a grass or a legume or some type of a cover that, we've got a list of what's considered a cover crop. So you're going to report that crop, and it can't be harvested. There are some termination deadlines. So either it has to naturally terminate, meaning that, it would be something that gets killed because it gets too cold, or you would have to terminate it by disking under or something like that. And so basically it's per $5 per acre premium discount. And so the acreage reporting deadline there is to, consequently, the almond acreage reporting deadline is March 15th. And for this cover crop, that deadline is also March 15th. So they're two separate programs. So it's not eligible just for almonds, but it's for any crop. Yes, you can. The question is this planting cover between the tree rows, yes. So if you
Good.
plant it between your rows, it is considered a eligible cover crop as long as it meets the requirements of the crop and then report it as being cover. You can't harvest it for benefit.
Good to know. I'll fix my slides in real time. Did that help answer that question?
It looks like we addressed that question. Stan, you'll pop in here, I'm sure, with regards to planting between tree rows. All right, any other questions? I've received message. We've had a scheduling issue with our friends at NRCS, so we will be providing a separate event when we get that scheduled and pinned down. Just for everybody on the call, we'll provide an event with NRCS, a similar webinar, allow them to talk through some of their programs as well that they have coming up. And as I understand it, a lot of things are in flux right now with these partners. They're great services. And I know there's going to be some updates. So this is, we appreciate everybody helping us work out the kinks and to have a continuing kind of training or exercise of these types of webinars to provide this information going forward. You can also find this information at our website as well as theirs. We'll have links to all of those. And then similarly, we will make sure to continually be providing updates both on social media, in our industry updates to membership and beyond. And if you have any questions, you know to call your local USDA office, your county office, but you can also call us at the Almond Alliance. We're here to help you as well. With that, do we have any other questions for anyone on the call? I want to make sure that I know just for me, I want to make sure that I recap, especially with frost and freeze being on everybody's minds. We're going to have much more information on that as that continues to develop. And just want to make sure that we reiterate, if you feel you are experiencing any damages or loss, please contact your local USDA office and your FSA office and let them know, get on the record with that. It is as simple sometimes as an email. I know in my experience working with FSA, it is as simple as just making that notification and getting on the record of providing that notification that you've experienced damage or loss as the policy catches up to nature. And that is where we come in at the Almond Alliance to really work with these partners and others at CDFA, your county ag commissioners, and at USDA to make sure that we are accurately representing what we see going on the ground into these offices as well. We've been actively doing that. I know I've been on the phone with Navdeep and others over the last couple of days with specifically regarding these recent frost and freeze events. So know that we're working on that. We're going to keep you up to date on that as well. And as more comes out from these agencies, we'll be providing more opportunities such as this. So if there are no other questions, we'll go ahead and close it out. Like I said, my apologies about our NRCS partners. We will make sure we get them scheduled for something as well and get that information out to you as soon as possible. And with that, we wish you all a safe and healthy weekend. Thank you so much to our partners. Thank you so much to our members. And again, if you have any questions or need any help in this space, it is our privilege to serve our almond community. Please reach out to us at almondalliance.org. And I'll even give you my email address if you need anything, aubrey@almondalliance.org. Thank you again so much. Thanks to our partners. Thanks to Nicole from our team for facilitating. And we will talk to you all soon. Take care.